Goldman, the Lehman Brothers, Merrill, collateralized debt obligations, this internet stock bullshit. I mean, it's a fucking travesty. I mean, I could take you step by step through what exactly is occurring. All you have to do is ask. I'm available.
So here they're talking to the SEC, and you can see here he is trying to obfuscate his activity, and he's talking about other things that are going on in the financial markets, one of which is collateralized debt obligations, or CDOs. And CDOs were really one of the key drivers behind our financial crisis that we had in 2008. And CDOs is where a investment bank says, look, there are lots of bonds outstanding. What we can do is we can collect all those bonds and put them into a new trust. And so the trust owns these bonds. And then what we can do is kind of liquidize them and then sell new bonds backed by that collection of securities that they've put into the trust. Now you're thinking, why on earth would you do that? That seems kind of crazy. Why not just stick with the original bonds? Well, it's all really about a credit rating arbitrage, because what they did is say, look, if we put lots of different bonds, different credit ratings into the pot, what we can do is we can essentially sell securities that on average will have a higher credit rating, because on a statistical basis, there's a lower risk of default because you are spreading a risk over multiple securities. So effectively, it's a kind of credit rating arbitrage. And what you're trying to do is take a collection of stocks, putting them into a big pot, sell new securities that effectively will have a higher credit rating. A higher credit rating will mean a lower yield. So this means that you can sell the new securities at a higher price than you bought the old securities, and you can make money that way. And actually,